Hey there, good morning everybody. Christopher Inks with Texas West Capital. It's just after 11 a.m. Central Standard Time here on, Monday, the 12th of October, 2020 in San Antonio, Texas. Great to have y'all checking in. Just going to look over a little bit of Bitcoin this morning, maybe take a look at the DXY. Guys, listen, here's the thing. At the end of the day, stop being so impatient. It's like the minute something doesn't happen, you guys are jumping ship and you're turning the other way. Stop doing that. You need consistency. You absolutely have to understand where your validation and invalidation levels are. Just because something does not happen the second you think it should doesn't mean it won't happen. But having an idea of where your validation and invalidation levels are makes life a whole lot easier. Make sure that you make a lot less mistakes. I only say this because everybody and their grandmother keeps jumping on me about the DXY, keeps jumping on me about Bitcoin. Guys, the reality of it is the DXY, we haven't made a lower low. The Bitcoin, we're still for almost 2 months now, in a market structure that's bearish. We've still got lower highs and lower lows. But yet you guys are jumping on each other talking about how it's mooning tonight. It may, but the fact that you're being so emotional about it and not paying attention to what's going on with the structure of the market at all tells me that you're the type of person that's going to lose money more times than not. So you guys need to relax, all right? By the way, you can join us over here at howtotradetowin.com. We'd love to have you with us. Like I keep telling you guys, over 50 plus setups that we got just last night. I think I put up over 20 setups last night for hot takes. Stocks, crypto, and Forex there. Tons of them. Lots of stuff, guys. And then, of course, you chart request, and you've got over 30 hours of live 30 hours of education, video education there. You've got, weekly live educational streams where we teach you all the tips, tricks, and techniques to get you making money today, even if you've never used never looked at a chart before in your life. I also just released a TradingView how-to video to get everybody up and running real quick. If you're new to TradingView, what all the features are and where they are and what they're used for and stuff like that. So I released that yesterday as well for our members. So anyway, we'd love to have you there, guys. Jump on in. Otherwise, you know what? You may kind of put it off, and then, price goes up again, and then again, and, you're stuck. SOL, man, SOL. You don't want to be that way, right? Who's here this morning already? Let's see. Pedro, what's going on, man? Good morning. Hey there, LG. Pedro, neutral DXY, see? Exactly what I'm talking about this morning, guys. We'll talk about the DXY, but no reason for me to be bearish at this point. Maybe more neutral, if that, but no reason for me to even be neutral at this point. We're still in a bullish structure right now. So we'll see. Hey there, Nevlusian, good to see you. Data, what's up, man? Patrake is here. Zet is here. Let's see here. What's going on, Sean? He said, noob here, been with crypto since 2017. Just went by guesses without learning as I had no time. Now serious about learning, even though I am making profit, which is just a stroke of luck. Man, I'll tell you what, Sean, man, that's awesome that you noticed that. That honesty with yourself is going to go a long way for your trading. One of the hardest things for new traders to do, again, it's all the psychological and emotional stuff that's really difficult for new traders to do, but it's the stuff that causes them to lose more money than anything else. And one of those things that a lot of new traders do is they lie to themselves. They kind of like, oh, no, I know what I'm doing and whatever, instead of recognizing maybe that they're getting it because it's pure luck. If you listen to people like Davey Day Trader there, who tells you, trading's easy and stocks always go up. I mean, obviously, he's had his rear end handed to him more than a few times here lately, because that isn't the truth. But so many young people come in, or new traders at all, and they listen to what he's saying and they believe the nonsense. You guys aren't going to become millionaires overnight. Trading is simple, but it's not easy. Now, we can make it easier at TWC because we teach you what's going on with the markets and how it's going and whatnot, and the proper way to use indicators and different techniques you can do. But it's simple because really price is just trying to find liquidity, guys. That's all it is. Price moves based on liquidity. And so that's what it does. So that's simple, but it's not easy to get out of your own way. So Sean, really great thing that you're noticing that, man, because what that means is you're ready to learn. And that's, guys, I've been doing this for as long as I've been doing it, and I'm still trying to learn every day. I'm still, every time somebody says they've got this new technique or something, I check it out. I look at it. I see, does it make sense? Is that something that can be replicated consistently? And can I do it on my, with what makes me a trader, an investor, the way that I am? Can I use that? Is that something that I could incorporate or some part of that? So, guys, I keep telling you, the minute in life, in anything, the minute you think that you know everything there is to know about a thing is the point you start falling behind. Don't ever believe you know everything there is to know about whatever it is out there, guys. You'll just be setting yourself up for some serious heartache, all right? Corn 100K, happy Monday, man. Good to see you here. Casper, what's going on? Ollie's here, Block Tech. Let me see here. That's more like 300 hot takes. Yeah, man, I had a lot of them yesterday, didn't I, man? Phew. Man, definitely. You guys have more than your share of choices, I guess you could say, in all those markets. Hey there, Brian. Good to see you. Hey, Ollie, what's going on? Yes, I am. New office. Yes. So I did this for you guys. Trying to look a little more professional, because you guys care about that stuff, I guess. But, yeah. So I appreciate it. Thank you for saying that. Hey there, Telluride. Good to see you. Is that Bianca there? Says, hi, Chris. Love the community. Still have so much to learn. The hardest part is indeed finding invalidation points on lower time frames when trading by myself. Yeah, well, welcome. Yeah, that's right. You just joined us not too long ago. That's right. Well, welcome. We're excited to have you with us. Make sure you're keeping up with every of the weekly Tier 3 live stream trading things we do every Wednesday. Make sure you're keeping up with that. And then, really the big thing of what you get with the setups that I produce are these explanations. And a lot of people sometimes get irritated with it because they just want to know, well, where do I buy? Where do I sell? I'm trying to teach you guys how to trade. So I go through, I take a lot of time to explain over and over and over again why we're looking at these levels. Why, if it's a wave 4, are we looking at 38.2? Why, if it's a wave 5, are we looking at 61.8? Why, if it's a wave 3, we're looking at 161.8? And all these different things. And why, if it's a pattern, why are we looking at this pattern target? I don't just assume you guys know it. I continue to repeat it because that repetition is what's going to set in right up here. And you guys will get better and better and better with it. And so that goes with invalidation levels as well. So even if it's something that you don't trade, guys, like I said, we update about 19 assets right now. We're going to add 2 or 3 more this week on a daily and intraday basis. Even if it's not something you normally trade, read it. And that way you get an idea of how you're applying these things and how you can look for these, these targets and these validation levels. Yeah. Hey there, Alex. Good to see you. Sparta Crypto's here as well. Let me see here. Gerben, what's going on? I still have nightmares about Dancing Girl Bitcoin video. I don't know what you're talking about, but I think I'm probably glad I don't. Pixafin checking in. What's going on? LXT is here. Kryptonio. Guys, man, all you guys are here. This is so great. Aramis, what's going on? Greg? Let's see here. Pedro's seen a possible pump to 93.40 on the DXY. So we'll go and look at that here in a minute. Yes, I'm the one selecting the hot takes. Yes, I do it all, the hot takes myself. Those are ones that I'm watching. Stocks, crypto, and Forex that I'm watching and that I may potentially trade as it plays out. Yes, exactly. Cred, man. Well, we'd love to have you there, buddy. If you have any questions or something, be sure to, if you're on our Discord server on the free side, DM me or DM Adam. If you want to email me, you can go, right up here and contact us. It's somewhere on here on this page somewhere. Oh, right up here. There it is. You can contact us, I guess, up here. Contact. Or you can contact me directly at christopher.inks@texaswestcapital.com. And I'll get to you as soon as possible for sure. Let me see here. Casper says, couldn't agree more, Chris. Until I joined, I noticed a lot of patterns which were meaningless without basic principles, which you taught me, which one has to consider when looking at patterns, such as volume and whatnot. Yeah, exactly, guys. Do I have a good resource on different trading strategies? This right here. As you guys know, some of y'all have been doing your jobs for a very long time, those things that you do really well, or even hobbies or sports or whatever. And so you'll know that once you've done it for a long time, you kind of pick up all these things. They all just kind of sit in your head, right? And that's the way it is with me with trading. Again, I've been doing this a couple of decades now. And so all these different techniques and tricks and tips and whatever, man, I've picked up over all that time. Some of them I've modified a bit to make them work a little bit better. Other ones I haven't changed at all. But yeah, I don't have any like single place anywhere to kind of do that. It's all in my head. So heaven forbid I lose my head someday, right? Hey, what's going on, Satoshi? Good to see you. And of course, Phoenix over here. Made a nice trade this morning with BSV. Oh, man, good to hear. By the way, I'm going to have that BSV as one of the new ones that we'll be releasing this week as far as our daily and intraday setups go. So we're going to do that one. Is it easier to just sign up for the year? Well, it's easier to sign up for, I think, I don't think we have a year option on there. I think we have a 6-month option. But either way, whatever our furthest option is, it's cheaper. It's definitely easier because if you sign up for more than 1 month at a time, you get a discount. So if you sign up for quarterly or biannually or whatever, you'll get a discount for doing that. So yeah. Phoenix, you're welcome. Sean, what's going on, man? All right, let's go ahead and jump in here, guys. See where we're at. So this is kind of what we're looking at here, and it's a white chart. My eyes. I can only do colors for so long. You guys know that. But late at night, these white charts are tough on my eyes. I'm getting old. Don't get old, guys. It's a trap. No, really, it's all right. Hey there, Crypto Mowgli. Good to see you. Phoenix says, I don't charge enough, seriously. Well, I appreciate that, man. And seriously, the price will probably continue going up as we continue to add more. But as I always do, guys, those of you that are in here know, if you're in here with me before prices go up, we usually just grandfather you in at your old prices, so you don't have to pay those increased prices. So that's another benefit if you plan to stick around with us for a while. So right now, whoops, hit the wrong one there. Right now, this is what I'm kind of looking at here. So the big deal right here to me is this ascending channel. This EQ here works beautifully as support and resistance. I've said before, it's possible this could be bullish going up. 1, 2, 3, 4, 5 going up, right? For right now, though, it makes sense to look at it as an ABC. Why? Well, because first of all, you've got a 1, 2, 3, 4, 5 down here. So unless you're looking at this as an ABC down, ABC up, and then 5 down, so A, B, C, expanded flat. Unless you're looking at it like that, this 5 down says it's the first one. It says it's either a 1 or an A. And we look for an ABC up. So that's the first reason. The second reason is because of the market structure here. Something I was talking to Discord about this morning. This is the high up here, okay? Pay attention. You've got a high, you've got a low. You've got a lower high, you've got a lower low. You've got a lower high still. So for now, it may go up. This doesn't guarantee it won't go up. But what this says is right now, you shouldn't be going, oh yeah, it's definitely going up to 14,000 today or tomorrow or something. No, that's just silliness. Because it hasn't even broken this market structure here, this high-low. Once it gets above that, then we can talk more about potentially being bullish, come off the bottom here and heading up. But until it does, guys, this is still most likely an ABC. The third thing is, on corrections, on ABC zigzag corrections, price generally stays, most of the time, 95, 98, whatever percent of the time, it stays relatively within a channel. All right? And so if this just gets reversed in this area up here at this channel resistance, that gives us an A, B, and a C. And we can look for it to head down there. It's a good clue that it may just be an ABC here rather than, 5 up. So all these different things we look up here. Now I've got, I've got this particular count I have on here. There's the possibility that this is an A and then this is an A, B, C, D, E triangle as a B here, which is a little bit different count than this. That's possible as well. And if we're on that, we've pretty much hit that triangle target right now. So there's a lot of things saying this could be done up here. On Friday, I told them that I expected price to complete wave 4 down here around the pivot, the 38.2. It got front run about the 23.6 here, but still pretty good. Got it pretty close. And then we had this move up this morning. Now this move up looks like it's a 1, 2, 3, 4. Looks like we're working on finishing 5 here. How else do we look at this? We can see that price moved sideways between the pivot and the R1. It did not bounce off the pivot. Because of that, I'm usually going to look for a rejection at the R1 and a retest of the pivot as support. All right, minimum. So I'm looking for this to get up in this area. Doesn't actually have to hit the R1. It can get pretty close. And then to come on down here. And if it's bullish here, we should get a bounce off here and continuation up. If this is the end of this advance, though, we're going to continue on down through that pivot and head down. If you guys have been following me for any length of time, you know I often talk about this with pivots. Because, again, used to be a pivots trader. That's all I did for a few years. And, again, when you move in sideways between the pivot, you're not moving up through a pivot or down through a pivot. You're just moving in sideways between them. Again, you're looking for a test and rejection of either the pivot or the R1. And then for price to reverse the other way. Since we didn't get it off the pivot, we're going to look for it up here around the R1. We'll see what happens. Let's see here. Other things. 1 hour, we've got this this hidden bearish divergence here. Where we've got, or this bearish divergence here, where we've got higher highs on price and we've got lower highs here on the oscillator. Again, suggest a reversal. H1 Stoke RSI here is topped out. Again, it doesn't guarantee. What we're looking for is a confluence of factors that suggest we may be at or near a top. Okay? And so this is what we're getting here. Let me see here. Let's see. If you look here, we get this high volume node area right here. If we bring in all this information, all this here. So we should generally expect to get a reversal in this area. What else? Again, if we look at this, if this count is correct here, we've got a 1, 2, 3, 4. If you pull this up here, again, generally for wave 5, we look for the 61.8, right? So we measure that out. Get this yellow off here. There we go. So that 61.8 is right there at that red line, 11.874 kind of area. Now the 50% is right here at the R1 pivot, which is 11.745. And then we have the supply structure EQ up here at 11.946. So just generally, I would expect a reversal most likely from this type of area right here, just in general. Now that happens to find confluence with the ascending channel resistance that I talked about. So it makes a lot of sense. Now again, price does not have to get up that high. The fifth wave, all it has to do is get above the wave 3 swing high in 5 waves. And again, right here, it looks like we've got a 1, 2, potentially a 3, 4, and it looks like we're working on maybe a 1, 2, 3, 4, 5, trying to finish out a 5 here maybe. So to me, there's a lot of confluence of factors in here that suggest this top may be here. Now, if you're looking at another chart, because not all charts are the same. And so if you look at another chart here, let's say Phoenix. And Phoenix is a little bit different, at least for the count. Because Phoenix has a drop here. Remember on BitMEX there, it was a 1, 2, 3, 4, 5, right? Well, Phoenix, this can't be a 1, 2 because 2 would drop down below where 1 starts. But you can go over here and you can go, okay, well, there's your 1, 2, 3, 4. 1, 2, 3, 4. I'm sorry. 1, 2, and then 1, 2, 3, 4, 5 gives you a 3, 4. And you can work out that count so that it still kind of comes out to where you're looking with this right here. So I mean, there's always different ways to count it. But like I said, this count may not even be legitimate. I mean, it's legitimate right now, but it may not be the valid count. The valid count may indeed be that triangle here. for wave B. A, B, C, D, E, and then getting this move up. So, you know, again, probably like a 1, 2, 3, 4, and then getting a 5 on this. So, either way, you know, it doesn't really matter which way is more correct than the others, guys, because really what you're looking at is if this is corrective here and not bullish, then you should see a rejection in this area that I highlighted with that green box. If you're getting up above that, or you're getting above this swing high here, again, that changes the market structure. Now you have a high, low, lower high, lower low, and then you'll have a higher high. So that breaks this market structure right here and means that you're, you know, potentially quite likely bullish. But until that happens, there's a great case to be made here for this being corrective. You don't have to be, or to think of yourself as some kind of perma-bear if that hurts your feelings or anything, to think that, guys. You're being logical. You're being reasonable. You're understanding what's going on and how the market is progressing here. That's what you should be doing as a trader, guys, not being emotional. Let me see here. So these are all the things I'm kind of looking at that kind of showing maybe there's something going on there. If we jump here to the 4-hour, again, 4-hour has that same bearish divergence here. Now, the 4-hour, as you can see here, is up just about neutral now, right about 52 or so on Stochc RSI. So if you want to continue pushing up here, you might actually get this into overbought here. But even if it didn't, the fact that we're in this downtrend overall, you know, you've got a higher or lower high here with RSI here, you know, suggests that you could always have something like this here where it turns back down and heads back down on itself. It's not something it doesn't do occasionally. You know, it does it often enough. So don't expect it just because we're bouncing out here, we have to go to the top. Now, this red line, let me see here. What's interesting about that red line is it's also basically the top of the structure here, but then the EQ that I was talking about of that supply structure is right here. That's the R1 pivot on the daily. Now your daily, you have been topped out on Stochc RSI on the daily all weekend long since the 10th. It's been topped out. Daily RSI, this is going to have to go on the other one. Let me move this real quick. Daily RSI here is printing a very large hidden bearish divergence here, where you've got these lower highs in price right now. And then I'm going to do still like this. You've got lower highs here in price, and you've got higher highs on your oscillator. And so a hidden bearish divergence, if it prints and reverses off that, again, it's a signal that it means a continuation of the downtrend. This is the downtrend. So it's setting up here right now. Price has to get above this swing high right here on BitMEX. That's going to be 12,071. It's got to get above that to invalidate that divergence there. But when you've got it where it's at, and that's quite a bit further up to go, and you're topped out on Stochc RSI, I mean, you know, it makes a pretty good case for potentially being as it says, you know, and it's seeing that price reverse on down. Let me see here. So yeah, I mean, that's kind of where we're at here, guys, with Bitcoin and what's going on with it right now. No real changes in anything. Pretty much what we were looking at last week. Let me see here. Get that down there a bit. So yeah, I mean, that's what we're kind of looking at, guys. Let me see. Let me catch up with you guys. Pixifin says on other exchanges it hit the pivot. How do you define rejection or bounce from a pivot? It depends. It always depends, guys, on what your chart you're looking at. Sometimes, the easiest way, guys, the easiest way is to look to move above a previous swing high or to move below a previous swing low. That's the easiest way to do it. Other times you've got clean channels, and you can look for a breakout or a breakdown of the channel. You know, There's not one specific particular way, and that's pretty frustrating for a lot of new traders because they're like, well, listen, I just want you to tell me, how do I know? Give me one way I can know so I can just look real quick and that's it. You're not going to do that as a trader, guys. And if you think that, I mean, I hope you really want to learn how to trade, but if you don't and that bothers you that I say that and you think, oh no, there's some way, guys, just put your money away, fold it up, put it in your pocket, and go spend it on something that you're going to enjoy because you're just going to give it to the market. I don't tell you these things for my health. I tell you these things because it's the way it is. But it's often completely opposite of what new traders think things are or what they want to believe that things are. New traders want to come in the markets and they want guarantees. They want absolutes. They want, perfection in everything they do, and they think that they can do that. No, you can't do that. You'll never be able to do it, guys, and not on any kind of consistent basis. That's why we keep talking about why risk management is the most important part of trading. Because without it, you're left with potentially, even if you've got risk management, it's your stop losses, it's your position size, it's your leverage that you're using. Again, position size there. All these things. Your stop, I think I said stop losses, your take profits, your invalidation and validation levels. All that's your risk management. There's a lot of moving parts in trading, guys. But it doesn't mean that you have to overcomplicate it. I give you a lot of different ways to look at these things, guys. But in no way does any of it mean it has to be looked at that way. All right? I give you these so that way you can look and go, well, that doesn't make sense. That doesn't make, oh, wait, that makes sense. And you start getting a feel for the things when you're looking at the charts that make sense to you. Because we're all different, guys. And so you want to do what works for you. Let me see here. Hard to get is mentioning on Bitfinex the 2 went below the 1, so the 1-2 is invalidated, except that, like I said, as I went through the explanation earlier, there's a different count. You start further back. There's a different count. It gets you to the same area. So, yeah. Pixafin says, thanks, Chris, with the different count on Phoenix. You answered my questions I made in Discord with... okay. So you talked about that in Discord? Okay, yeah, great then, yeah. Yeah, it's always, if it looks like it may be invalidated on one exchange but not on another, on the one that it's invalidated, see if you can still find a count that works out with it. Most often you'll be able to. And so, because price is generally going to follow where it's going to follow. But the exchanges all have their different prices. And, price move, they all have the same prices, but they just, where they top out and where they go down. So their swing highs and swing lows are at different, different price points, which create different pivots. They create different potential wave counts and whatnot. But price should generally always get to that same area. So if you're using Elliott Wave, you should still get to that same area, though it may be with a different count. Yeah. Hey there, Candle Shepherd. Good to see you checking in, man. Let me see here. Okay, so DXY. So we're kind of here with the DXY. Now, as I've told you guys, until we're really kind of pushing above this, I still consider it suspect that this bottom may not be in. Or, it's suspect that it is, What we're looking for is an advance above this descending resistance. Until then, you've got to be cautious for it to go down. Now, here's the thing. If this is 4 right here, rather than finishing out 5 down here, if this is 3 and this is 4, 5 is likely to be pretty close to where 4 bottomed out at. It shouldn't go any long, deep drop below. So if this is just 4 and we're doing 5 here, then 5 is going to probably, get down here maybe around that 90.95 kind of area or something like that. But we'll check it out if it is. For right now, the same way I was talking about Bitcoin being in that bearish trend with the lower highs and the lower lows, that bearish market structure, this market structure continues to be bullish. We've got a high, we've got a low, we've got a higher high, and right now we've got a higher low. So structurally, until it drops below really this swing low over here, until it drops below that, it's still higher lows and higher highs. Now, if we go in here and try to count it, DXY is kind of a messed account. It is what it is. But we may potentially have what I'm looking at here if we're getting a lower low off here. Now, it doesn't have to. It could go off here and just take off. And I'll go back to my other count that this is A, this is B here with the triangle. And then we've got like a, I don't even know, some other weird count going on. But I think we've got further to go down here with the DXY, I think, overall. As you can see, again, everything else aside, we moved in sideways between the pivot and the S1. So we went up here, but we didn't actually hit the pivot. We got rejected pretty well below it. So I would generally expect price to come on down here toward this S1. Now, if it does, my first target is this EQ of this demand structure here, right about 92.87. And then I've got an S1 target down here, which gets it right about almost at the invalidation level of a 1-2 here. So it would have to bounce just above that S1 pivot. If it does that, then we're looking for an advance through the descending channel EQ. That gives us then the descending channel resistance as the target. If we break out of that, then the next target is the larger channel resistance. If we break out of that, then, again, we should be looking at likely being bullish with a move above this swing high up here, likely confirming that. If it continues down below this swing low over here, that doesn't necessarily make this a 4 up here and this a 5 down here. As I said before, again, it's possible, if we're looking at this, I think, that we might be able to get a 1, 2, 3, 4, 5. So all this would be a 1, and this would be a 2. And so if this is a 2 on this breakdown here, then we look at retracement levels, and all of a sudden, it's no big deal where we're at, right? All of a sudden, we've got the 61.8 right around the EQ here. And by the way, as always, that's the 61.8. Remember, I keep talking about it's an important place to watch. So out of this whole advance, the 61.8 is right there at that EQ, where my first target is, looking for this bounce here. But then even beyond that, you've got the 70.5 right here at 92.63. You've got your 78.6 right around the S2 pivot, and it's actually right here at the top of this demand structure right here. This fresh demand structure. It hasn't been touched yet. So generally, if it's a fresh demand structure or a fresh supply structure, it has never been touched before, then usually your first touch into it is going to be a strong, well, in this case, it'll be a strong rally out of it. You'll get a great reaction off that, usually. So even if it gets down here, if this is a 1, 2, 3, 4, 5, so this is a 1, and this is a 2 here, then, you're only getting the 78.6. That's a legitimate solid wave 2 retracement. You look for the move up. But again, ultimately what you're looking for, guys, now, locally, you're looking for an advance through this local descending channel resistance. Other than that, you're really looking for an advance through this large channel resistance here. You're getting above that, again, I don't think you really have too much reason to be bearish on the dollar at all at that point. Because this is that channel resistance that comes down all the way from the high on this decline. So months and months and months of downtrend right here. So you're breaking through that, you should be good to go. Now, right here, you can notice that you're getting a bit of possible bullish divergence, or will soon be if price dips down below that swing low right there. So you're getting bullish divergence here on the 1 hour. Let's see here. There we go. Stoch RSI can stand to fall a bit more. It can. I think it's got to get down in. I think it's going to get down in here and oversold before it turns up. So again, that just gives us more of this potentially heading down. Plus, you look here and you've really probably got an ABC off here. So you're getting a 1, you'll get a 2, you get a 3, and a 4, and a 5 is what we'll probably be looking at for that. Or at least right now, that's what I'm looking at. If you jump into the 4 hour, the 4 hour is dipping here. It'll dip down back into oversold even better. Stoch RSI will come on down there. But it's pretty well primed to go up, right? And then the daily, the important one, the daily here. As I keep reminding y'all, that Stoch RSI is just about bottomed out now on the daily. Yes, we dip below the pivot, but you see this area right here? You see all this support? If we're bouncing in that area and heading back up, I definitely see that push right up back through the pivot. And so if we do that, if we push up through the pivot and get above this swing high right here, this 94.03, that should pretty much say, listen, you're heading up. You're going up on that. The daily RSI is not down and oversold yet. It might not get there. Especially if this is, just a 1 and you've got a 2 here, or a 1, 2, 1, 2 going up. That Stoke RSI or that RSI is likely not to get down even into oversold here, because you haven't done your full 5 waves up first. Usually it goes the 5 waves up and then it retreats to oversold. But again, we need to see those things happening before we, jump off and say it's definitively bullish. At this point, it's still bullish market structure. It's not bearish market structure, but that could change. So I say this because I get a lot of silly, ridiculous comments from people, especially on Twitter and whatnot. People just don't pay attention. They hear what they want to hear, or they're just trying to be rude individuals. And I tell you what, guys, if you ever wonder if you're coming off as just being an idiot or a jerk, just to be rude rather than to discuss, and you wonder why either I don't respond or I block you, now you know why. Go cry to your mama. I have no time for that in my life at all. But, again, guys, if you want to discuss, we can always discuss. As you see, I'm just not bullish to be bullish or bearish to be bearish. I've always got reasons with the charts of why I feel the way I do. And those include invalidation and validation levels. These include things like market structure, like channeling, like pivots, Elliott Wave counts, whatever. There's there's always going on in there. There's something supporting what I'm saying. But again, a lot of, and I tell you what, guys, if you come off as rude like that, I know right away that you're not a serious trader. That you don't trade with any significance, that you're just being a troll online, that you're not worth my time or anybody else's. And that's why you get blocked. That's why you get ignored. But if you ever want to have an honest discussion, guys, think of your approach. If you can come off as a decent human being who's just discussing ideas, I love to discuss it, man. I don't care. At the end of the day, guys, I think you guys are too worried about chasing clout online or something. You guys are also worried about what does somebody think about me online. Stop with the nonsense, guys. Oh my gosh, there's a movie. You guys need to see it. I often talk, especially when it comes to you guys, sometimes you'll approach me and be like, oh, well, it seems like everybody's bullish or everybody's bearish, right? And I keep trying to tell you that, when I ask you, where do you get that from? You're like, oh, my feed is full of all these people, my Twitter feed or whatever. And I keep trying to explain to you, it's the AI that does it. And so if you don't believe me, there's actually a movie on, oh gosh, is it Amazon or Netflix, called let me think here. I think it's called the Social Dilemma, maybe. Maybe one of you guys can help me out with that. Let me see here. Yeah, it's on Netflix. You need to watch it, guys. It's a big talk about the way in which social media polarizes thought and gets you to think things or gets you to believe things that may or may not be true. And so it's a great thing for you guys to pay attention to and hopefully take to heart. Again, guys, one of my educational backgrounds, I've got a master's in psychology. So this is no surprise to me. It's nothing new. It's the same stuff I talk about. But you really need to pay attention to that, because if you're trying to trade on sentiment and you believe the market is a certain way because of what your social media, everything from not just your feed, but the results in the order they come up on, all these things, because the idea of social media is they want your engagement and they know you're going to engage if it's something that it appears to be what you believe in. And so that's the way social media is kind of, created there for you. So watch that movie, guys. Like I said, it's called The Social Dilemma. Yes, Social Dilemma on Netflix, Jay Fries. Yes, exactly. Joe the Butcher, you're green as well. Good to see you guys. Trenton, good to see you as well. If you guys have seen it, please let me know what you think about it. I think it was a fantastic thing to watch. And it's the reason why my 9-year-old son does not have social media and will not have social media anytime soon. There's no reason to, guys. Your kids should not have that stuff. It's really bad. It's really bad. You're getting manipulated all day, every day. But, again, not just with the markets and in your belief maybe in what sentiment is. It's a lot more with just in life in general and things you may believe, whether they be politics or religion or sexual identification, all this kind of stuff. Just understand that you're probably being manipulated in some way. And for a lot of y'all, you're going to go, oh, no, I'm not. No, I'm not. Guys, don't be so naive. There's a lot of money in this. That's why they do it. Don't think that you're that much smarter for the most part than, what these AIs are. Joe the Butcher, you made your wife and kids watch it, man. That's fantastic. Yeah, I'm going to have my son watch it as well. It really is a great thing there, guys, to watch. Bianca, yes, it says a successful break of the trend line translates into a daily open and close above it. Volume and other factors like indicators lining up, ? And what should we look as most important? Thanks. Yeah, so if you're looking at this trend line here, yeah, what you want to see, guys, the more legitimate your line is, so whether it's a channel, a channel is just a pattern, or if you think you might have a head and shoulders pattern or a triangle pattern, whatever, what you want to see is impulsive movement through that resistance. All right? And so what that means is you want to see larger candle spreads, larger volume ramping up as it moves through that. Now, most often it'll come back and retest that general area before it continues up. And if you get that, that's a good clue. Hey, you're good to go. But you usually don't want to see little, let me see here. Like this right here, all this overlapping little small candle spreads, lots of wicks. You don't want to see that as you go through something like this here. You want to see nice large candle spreads going up through there to give you an idea that there's impulsiveness, that there's real demand behind that, pushing that drive through it. That's what you want to see. And you want to watch it at least on the 1 hour, if not the 4 hour, if you're looking for something like this here. Because if you're a shorter time frame, you could get a pop up and a pullback before it finishes out. If you're looking at the 15-minute time frame, you may get up and down through it, over multiple 15-minute candles before the 4-hour candle actually closes above it. So if you look at the 15-minute, you'll see all this back and forth on it. But if you look at the 4-hour, you'll just see the big candle push up through it. So yeah, that's what you'd be looking at. Joe the Butcher says, used to do SM marketing for companies. Your attention has been open to the highest bidder for years. Yes. Yes, exactly. And it's the same thing. Often on-site, online guys, you'll see people, they'll have they're on Facebook or something. They'll have this little thing that says, you do not have my permission to do all this. Federal government, you need to go away. You cannot do it. Guys, it's such nonsense. You don't own your content. The platform has it. Platform, when you sign up, all those things that you don't pay attention to and read, says that the platform has rights to your content and whatnot usually. Don't think for a second you guys, federal government, you can't, follow me on here because of my, because I put this little thing on here that says you can't. That's such nonsense, guys. So don't fall for that nonsense. Don't keep passing it around. If you are using a free service out there, just assume, because it's likely the way it is, that your content is their content. That you belong to them. That your attention belongs to them. Because that's you. I mean, like it says in the Social Dilemma movie there, you are the product, guys. Or even more so, your attention is the product. They're selling that to the advertisers. Don't ever forget that. And they will manipulate the heck out of you to get you to spend more time on their platform. And that means telling you what you want to hear. Because if you see other people that are saying the same thing you want to see, then you're more likely to listen and interact and become more involved, spend more time on their platform. But again, taking it all the way back, if you're looking at sentiment based off your social media about what you think everybody's doing, you're probably wrong, more likely than not. Because it's just based on you. And these algorithms, guys, they're very, 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 I don't want to use the word smart, but they're very in-depth. And they are dang good at profiling you. So if this surprises you any, do what you need to do, guys. But this is the truth of what's going on out there, all right? Hey, Trader XO, what's up, buddy? Good to see you here. You said you've been watching the bond yields? Man, not much happening on that side yet? Not yet. But there, something's going to happen. Something's going to happen with bonds there. But anyway, guys, so, this is kind of where we're at here. And so, again, we'll see if we can't get this thrust up here at least to this R1 pivot area. If not the red line, if not the EQ up here. A move back down below that pivot should indicate that the top is likely in. And then continued decline below, in this case, you can go below this wave 2 over here. That'll get you before wave 4. Your next level can be this one right here, this wave 2, which is 10,376 on MEX. But, if you're getting that, you're declining below the ascending channel support, and that's another clue that you're likely that your top's most likely in. Again, then you can look at the wave B swing low over here as you look at that. So just remember, guys, long story short, until you push above this swing high up here, you're still in a bearish market structure. Still lower highs, still lower lows. Everything else aside, your emotions and everything else, you're still in a bearish market structure until you get above there. Again, that does not mean this can't be a 1, 2, working on a 3, 4, 5 heading up. But this should be your warning sign. This should be your, hey, okay, got to get my emotions in check. We may be, and I still think we may be. You can say that to yourself. I still think we're bullish here. I'm going to play it that way, but if we get rejected before this and, we start dropping below these swing lows, that's going to start increasing the odds that I'm wrong. That it's not going to go above this, and I need to pay attention to what Chris was saying, and it's potentially headed down at that point. So, there you go. Joe the Butcher, have a great day, bud. See you over in Discord. So, that's really it, guys, as far as it goes. I saw a really bad, somebody posted a Trade Devils video. And I don't have anything against them, guys. I think they happen to do really great work with Elliott Wave, honestly. I think they do. But completely, I'm not sure what his name is, Sam or something, I guess. Completely out of his element with Wyckoff. So if you happen to have seen that lately, just remove that from your brain. Honestly, he didn't even know what he didn't even know what the labels were called. He didn't know where they belong when he was putting it together, and just, I applaud him for looking at Wyckoff, but I keep telling you guys, man, you can't just look at that one page on the internet and go, oh, now I know what it is. It's so much more in depth. And there's things even wrong with some of the schematics on there. So just be careful with that, guys. Again, I'm not trying to disparage Trade Devils in any way. I'm just trying to say if you guys happen to see that because some of our members saw it, just kind of remove the Wyckoff part, that last video out of there for you. Because there wasn't a whole lot correct in what he was saying with that. I may pull up Wyckoff here for Discord today, probably sometime. We'll put it together there, and then you guys can see what we're kind of looking at with that. If not, later this week sometime. But I just want to kind of put that out there. Again, guys, I'm not in any way trying to disparage Trade Devils or anything like that. Like I said, I think they do a great job. They give you a lot of great looks as far as Elliott Wave goes. Market geometry, stuff like that. I think it's great stuff there. But definitely completely out of his element, unfortunately, with Wyckoff. And it came off really bad. And if you're trying to use that as some kind of reasoning for why you should or should not be in whatever positions you're in, I think it's probably going to do more harm than good. So hopefully you guys understand. I think you do. I think you understand me. Do I teach Wyckoff? I do. And as a matter of fact, I've kind of been leaning a bit more toward Elliott Wave lately because that's what a lot of people want to learn. But I'm going to start really pushing more Wyckoff So if you're in Discord, guys, and you've been looking for more Wyckoff, get excited. I'm going to start using it a lot more again for you guys, so you can get more, again, more exposure to that with that as well there. James Mayer says, watch your step a little. Well, James, again, I wasn't trying to be rude, man. I was just saying that it was very much wrong. I mean, there's no, subjectiveness to it. The labeling was wrong. The way he referred to the labeling was wrong. It wasn't good. And I'm just warning everybody in case they're going there thinking that that's the correct way to look at it. That's all. There's no watching any steps that I have to do there. It's just, it was glaringly, blatantly wrong. That's all. And like I said, they do a great job with Elliott Wave. And I think, market geometry and stuff like that, I think that's great stuff. Definitely worth watching for that. But the Wyckoff was not good. It was very wrong. And if you're trying to use that, again, to trade based on, it's going to cause you a lot more headache, a lot more loss than probably wins using it. Because it was so, not correct there. So that's all. Again, guys, I have nothing against them at all. But because people in Discord brought it up, I need to address it, right? Well, James, you know what, man? Listen, bud, I don't know what to say to you, man. If you can't understand what I'm saying, I don't know. You've been following me for a long time. You should know. I'm not saying anything to be rude or disrespectful to anybody. But there is significant difference. There is a correct way. There's an absolute correct way to do Wyckoff, man. And if you're not even getting the labels right, then how can you say the structure is correct? I mean, I don't know how else to explain this, James. And I really wish that you would step back and take a deep breath and think about what I'm saying. Because I'm not trying to say anything is bad about them. But they are clearly... no, I'm not calling them out. I'm telling them because I had people in Discord talking about it and doing it. That's all. That's all. Again, And I don't know. I don't know. I think if you see something that's blaringly incorrect, I think you could say something about it. I mean, it's not even like Elliott Wave where you may, mess up a count somewhere, If you're following the rules and the guidelines of Elliott Wave and your count happens to not be the correct count, that's different. When you're using Wyckoff, it's not counts. There are specific things that need to happen to have those labels where they are. And if you place those labels in other places, you're not doing Wyckoff. This is the point, James. This is what I'm trying to explain. So I'm just trying to let people know that if they're going by that, they're probably going to get hurt on it. But definitely watch the other stuff for sure. That's all. Is there a way to label his ideas correctly? Yeah. I mean, he had he had the trading ranges correct where they are. He had that correct. Definitely. But again, it was the complete, the not understanding between the volume and the price action and then, where those labels come, that kind of makes things really wrong on that. That's all. So, yeah, I mean, that's exactly it, Chemo. Exactly. Yeah, I'm not trying to call anyone out. See, and guys, with what I do here, I've got to do what I've got to do. And, if you unfortunately feel a certain way that it's not the way it's meant to be, I mean, I don't know what to do for you. Again, if you've been following me for any length of time, then you should know right away that I'm not trying to be rude to anybody or do anything disrespectful or otherwise unkind with this. I'm trying to help you all out. That's all. That's it. But anyway, Hank, man, I love I love Karate Kid movie, man. That's an awesome movie. Anyway, guys, well, I don't know that James is very sensitive. I don't know. I like James. Like I said, James has been following me for a while. I would lie if I said I'm not a little bit hurt that he's not catching what I'm putting down here, because he has been watching me for so long. But it is what it is. But it just, guys, it just is what it is. There again, I'm not in no way saying that they're not good at what they do. I'm just saying that Wyckoff is not in his wheelhouse. Not yet, anyway. And so it's just a dangerous thing to follow that particular thing when it's not correct. That's all. And it's not an opinion if it's correct or not. It would clearly not correct with the labeling and everything. So, that's all. That's all. So anyway, but anyway, okay, guys, that's it. So, guys, if I offended you today, hey, you know what? I apologize. Don't mean to. I do what I do here, and I try to make it. I try, guys, again, what I try to do here is I try to educate you, and I try to, things that are blatantly wrong online, I try to point out. So that way you're getting an idea of what is correct and what's not when you look at it. There's no malice meant in that. Unless it's Davey Day Trader. No, really, I don't even have any malice against him. I am concerned, though, because he leads all the Robinhood traders, and they don't know what they're doing. And he doesn't seem to know what he's doing a whole lot. And so, with all these silly mantras and stuff. And so even, again, like I said, even if it is just a marketing thing, you've got a certain responsibility with that big a following, I think. You don't want them believing what you're saying, if especially if you don't really mean it. It's just going to get them hurt. Yeah. But anyway, guys. All right, listen. I'm out of here. Hank believes in social media. If you don't tick people off and every now and again you're not doing it right, I'd rather just not do it then. I don't want to cause people to be upset in life, guys. I'm really, guys, I tell you what, if you don't know yet, my life, the way I live life, man, it's just live and let live, love and let love, right? Help people be better people. So if I don't like the idea of having to, cause heartache with people. But it seems to happen. Not intentionally at all. So, it is what it is. Listen, guys, I really appreciate you guys checking in with me. I might or might not have a Wednesday show. We'll see. We've got a follow-up appointment that we got to do from last week that I had. So that might or might not end up being Wednesday. I'll let you guys know. Follow me on Twitter or over here in the in Discord. And that way I'll let you guys know if we do or if we don't. But if we do, again, it'll be at 11 a.m. Central Standard Time on Wednesday. So hopefully you guys can check in there. Like I said, guys, join us at howtotradetowin.com. We'd love to have you there. Be a part of what we do here. Lots of stuff going on in Discord. So don't forget, the only thing you control in the market is how much you lose, right? So no matter how good it looks, guys, it's all about that risk management. Y'all have a great day, and I'll catch y'all later. Take care.